Hey everybody, I am Howard. Oop, I'm going to go backwards, all right. And I'm going to talk a little bit about the art of trend spotting. I am excited to be here. AMP, I'm embarrassed to say, maybe because I've become an ignorant American, I wasn't even familiar with the size of AMP until I saw your building. So now I'm impressed. Everybody should have a building. And I really want to thank, this is an incredible community, an incredible reception. And I had the opportunity to bring my wife. We've never been to Australia, and when I got called to come, I said, well, I need to bring my wife, because I'm never going to come to Australia unless I get invited. And so you flew, and then I, of course, stretched it and said, can I bring my son? And lucky for AMP that my son only flies first class. So he saved you guys about 30 grand. So anyways, I want to talk about angel investing. And it's a really fun time to be an investor in general. You know, I have a startup, and if I can have a startup, anybody can have a startup. First of all, I don't code, I don't know tech. You know, I don't dress properly, and I swear a lot. But I love stocks, and I love the markets. And I think we're in this new era where anybody can learn the language, whether it's Chinese or Spanish, or the language of finance. And as you know, at AMP, you know, finance has been some mystical language to so many people. You know, you make money, you sell your business, and all of a sudden, you have to hand over your money and learn a language or be told that you don't need to learn the language. And I've always been fascinated by stocks and markets because of the competition of it all. We get to compete against everybody. So I think in this new era of social leverage, anybody can do what I'm about to show you. In 2008, I was inspired by Twitter. How many people here use Twitter? So not a big, you know, and I already after 2 days have some philosophies about Australians and Twitter. But same thing. In 2007, 2008, Twitter was this company and people were talking about this product, and I was like, not going to adopt it. I was blogging, I was writing, I created this show called Wall Strip that CBS had bought. So now I had become someone who was supposed to do all this stuff. And I really didn't get Twitter. And Fred Wilson, who's a really good friend of mine and a mentor, who happens to be one of the best investors in the world, media investors, offered me an opportunity in 2007 to invest in Twitter. He called me up and he says, Howard, you know, you made me money in Wall Strip. I think you should invest in Twitter. And I said, absolutely, I love that product. And he sent me the term sheet, and they were raising money at a 20 million valuation. And I said, are you stoned? Are you out of your mind? And so I passed on Twitter in 2008. That 25 grand would be worth 4 million, and I wouldn't be here right now. I'd be on a beach somewhere. So that's how close this whole industry became. Just in 2007, we did not have, it was the dark ages. We didn't have this in our pocket. We didn't have the internet in our underwear and in our socks. It was, you know, we were ruled by Canada and the BlackBerry. And how many people in this room have a BlackBerry? Probably a lot, because you're in the financial business. But now those few people that have it are embarrassed to hold it up. But in 2007, we didn't have this. And what's fascinating about this era is it's brand new. There are no experts, right? I mean, I'm here talking in front of you, being called an expert, and I appreciate all that. But at the same time, you have to have some, you know, it's really humbling to see how fast the iPhone changed. And in the United States, one of the biggest arguments on our site, which I'll walk you through quickly, is Apple, you know, dead? I mean, you know, 130 billion in the bank, a global company. You know, they invented the iPhone, holding my iPad. My kids are addicted to their iTunes and Mac Air, and people are talking about them that they're dead. So I think we're at this interesting place where there's this much cash being created in the world and this much new wealth being created in the world. And there's also this massive level of distrust. And that distrust comes from, not that long ago, if we look at those two charts, our old friends AIG and Citigroup, that at a time where the world was coming to an end, I think it didn't happen as badly here. Australians weren't levered as badly, I believe, as Americans. The world was coming to an end, as what happens in trend following, you know, the death of one potential industry leads to the outburst of many other industries. And while the world was complaining about too large to fail, too big to fail, something that I believe happened is those people that wanted to change things, you know, I call it too small to fail. You had all these companies starting out while we were bailing out the banks in the United States and talking about too big to fail. Silicon Valley, New York, a bunch of angel investors started changing things with 100 grand, 300 grand, 500 grand. Too small for the big institutions to take part of, and they dismissed it. And then boom, in 2008, right when these companies were crashing, Facebook and Twitter hit their serious growth curves. And now we sit here in 2013, and Twitter has a 10 billion valuation, and Facebook, I don't know, 50 or 60 billion valuation. So right at as the era as what I call financial leverage was breaking down, something that I coined called social leverage was taking off. And that social leverage is the people web. Is once we all had this iPhone attached to us, this was our new extension of who we were. This was our mood, this was our platform to publish, this was our communication vehicle. And so everybody is connected. And you know, while Wall Street tries to figure out what Twitter is worth, what Facebook is worth, what all these little companies are worth, they can't. Because when everybody's connected, you can't quantify the leverage that's going to happen. And so we're in this era of what I call social leverage, where people, the people web, where, you know, I come to Australia and I tweet that I'm here, and hundreds of people who haven't met me kind of know me and invite me and tell me what restaurants to go to. And so all this commerce is being created and all these friendships. And Wall Street or the rest of the world can't possibly quantify where this is. Now, on the negative side, they also can't quantify the slippage. You know, Twitter, as a 6-year-old company, 7-year-old company, is still struggling truly around who it's going to be, because they don't make money off me being invited to speak at AMP because, you know, of my social experience. There's all this slippage in the system as well. Twitter can't possibly put its arms around all the money that's slipping and all the commerce that's going through its cracks. So it's stress in the system. It's a different type of stress. But as always, there's no free lunch and there's no perfect game. There's slippage. I saw Twitter. I was not smart enough to invest, and I'll get to the lesson of that in a few minutes. But I was talking to Fred. I said, you know what, Fred, people will talk about stock. Like, Twitter makes sense to me if I could talk about stocks. I'm buying Apple, I'm buying Google, and Fred encouraged me to start it. And I said, well, I'm going to start StockTwits, which is Twitter for stocks. And this was back in 2008 during the crisis. And I would explain it to people. And back in 2008, like not that long ago, I would say, people would say, what's StockTwits? And I would go, it's Twitter for stocks. And people would go, what's Twitter? And that wasn't that long ago, so I really had a problem, because I was creating a product on top of another product that nobody even understood what the main product was. But my idea around StockTwits was, this is a perfect vertical where everybody in the world is chattering about things, to really kind of get a feel for what is in the consciousness of people that love stocks. So we had a problem too. We had to figure out how to get the context out. We had to figure out, if I'm talking about Apple, am I talking about I went to the corner store to buy a green apple? Or am I talking about I love Apple's products, I think, you know, the stores are packed, I'm getting along this stock. And so we came up, luckily for us, with the idea of a dollar sign. That if, you know, the symbology of finance was such that if you were talking about Apple, to people that love stocks, it's AAPL. And we slapped a dollar sign in front of tickers, and that was our way to get people to talk about stocks. If you really wanted to talk about stocks, you would put a dollar sign AAPL or dollar sign GOOG. And slowly over the years, it's become the main way that people talk about stocks on Twitter. And so we're really proud of that. Our iPhone app, which I think kind of really is great and bad. It's great in that it really is the perfect app to drill down as a stock person what is on the mind of traders. And we have a trending list of stocks that changes all the time, which is really what's happening. And then obviously we have our streams of what people are talking about. So that's StockTwits. And something that I've learned about angel investing and about investing in general is it really helps to be involved in these trends, to really be using the products. One more slide. Using these products. So in 2008, I came up with these new normals, and one of them obviously being too small to fail. There was all these startups and all this leverage in Twitter and Facebook, and these companies did not need a lot of money. This was, the era of financial leverage was let's pile in, let's lever it up, let's build more houses, let's do this, let's build more. But in the startup world of Silicon Valley in 2008, it was about how small can you be? You don't need $7 million, you just need $500,000, and let's see how far you can get and what roadmaps you can achieve. The other thing became what I call punch a banker, hug a developer. And in America, they don't like hearing this, but if you don't have a great relationship with a technical co-founder, you're screwed. You can't go out there and start a business anymore. In the early 2000s, in the first web, you could outsource it to India, you could outsource it to Budapest, and outsourcing became a big idea to build products. But in the new web, in the social mobile web, it's more about UI and product design and that experience, and all this stuff has to be done in-house. So you really need to, like I say, hug a developer. Next is your timeline is everything. In the financial industry, we had Bernie Madoff. We have this secrecy around what our numbers are and what our returns are. And at StockTwits and using Twitter, I always believe that your timeline is your track record. What you really were saying and doing the last time the Dow was down 2,000 points. Were you panicking, or were you the person keeping calm and doing some dollar cost averaging, for example? So your timeline is everything, and that's something that the social media has brought along. Next is social deposits. I think this era is now about giving first, meaning as long as I continue, deposits are so cheap in the social world. I know it sounds frivolous, you don't have to, people don't want to tweet or they don't want to share something on Facebook, but there's never been a better time to be an expert on the subject that you're great at. And for me, it was stocks. I'm passionate about stocks. I read all day. Why not share? Sharing has built this audience for me that allows me, when I need something, to ask for something. And so I built up these, what I call, it's a new banking system. And I say, yes, there's rapid inflation in the system in that you have to make a lot of deposits. It's not like dollar for dollar, you can say something and then ask for something. But this era that we're in where you can continually give and share and network, and then when you really need something, take out a withdrawal, is something that's very interesting. And finally, foreplay. The men never like to hear this in the room, but in this world of social, okay, when everybody is as accessible as everybody's accessible. 15 years ago you had to call a secretary, but everybody is accessible now. That in this world, you can't just, because you know how to reach Howard, or I'm at Howard Lindzen, send me a request and expect magic to happen, okay? We're busy too. Just because I'm accessible doesn't mean I want to hear your pitch the very first time. If I inspired you, fantastic. Don't call me and tell me you have the next Google before you've introduced. So there's this etiquette that people are going to have to learn over time, which is, yeah, I've got this access to Howard and all his friends and all those friends and Mark Cuban and all the other people that I may know, but you can't just come out and blurt, hey, Howard, saw you, blah, 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 I have this fantastic idea. There's still some etiquette involved in this world, and that's where I would tell people, no matter if you've never started doing this, to start, because the sooner you start making deposits in the system, the easier it is for you to take withdrawals. In our new world, our new profile, our new who we are, is that timeline. People are going to go back and digest, the public, whatever's public about you, and they're going to go do it. So you might as well kind of get involved in that right now and frame your own who you are. And, there's different ways to do it. Facebook, I would argue, is a place that it's too easy to be fake because it's very friend-focused. Whereas for me, Twitter, and now for StockTwits for me in finance, is the place where I can kind of be true to me. If you're a grumpy person, there is no way to hide it on Twitter. You may be able to fake it for a day, but by day 3, you'll be yelling at people on the stream and complaining about your mom and your wife and your kids. And so it's very hard to hide your true self on these platforms. So this is what resonated with me, and I felt that this trend was going to happen. And I'm a classic trend follower. And what I've learned over the years, as soon as I mention that word, as soon as that word gets in, it's a beautiful world, trend spotting and trend following. And in the financial business, the CTAs were the classic trend followers, currencies, et cetera. But as soon as I say that word, and even in the United States, people go, oh, risk, oh, can't take it. They think of that word, they think of momentum, they think of, greater fool theory, they think of, crowds, stupid crowds. And so I like to call what I do, I'm an eclectic opportunist. And I was watching Bill Gates on 60 Minutes about a month ago, and his wife leaned over and said, Bill's a grumpy optimist. And that really, I had just written about the whole idea. I was tired of this industry being about framing people in novice. In the financial world, it's all about, like, fill out the paperwork. Are you a novice? Are you an intermediate? Or are you a professional? Even on StockTwits, it's like you sign in, it's like, claim yourself. And I'm like, I was thinking about it one day, and I'm going, well, that's just dumb. You sign up for StockTwits, and you immediately have to call yourself, if you've never done this before, a novice, which immediately changes your whole experience on the site, because who's going to want to come to my page if I claim myself a novice? And so, this industry that we're all in, the financial industry, is so stuck in some old thinking around how we describe people. Because you know what? In this world, everybody's an expert at something. Maybe not be something that every other person likes, but everybody's got domain experience in something. And so I like to call what I do eclectic opportunist. Because as a trend follower, I don't care what's working. I can't complain about what's working. I don't love biotechs, and I don't love gold, and I don't love natural gas and stuff that I don't understand. Okay, so I have to ignore that because I truly don't have an edge. But if it's trending, it's trending. And so you can't just fight and try and stay dogmatic about your approach. So, Bill's a grumpy optimist, according to his wife, and I would call myself an eclectic opportunist. And I'll come back to that in a sec, but trend spotting is about connecting the dots. Has anybody ever seen this game, Dots? So Dots is like the #1 game. It's kind of a simple game. And I'm indirectly an investor. I'm an investor in BetaWorks, which created this game. And I don't know anything about games. I'm addicted to this game. But what's interesting about this game, it's called Dots. And that's the business that I'm in. That's the business that investors are in. That's the business that your customers are in. The best people at this business connect dots better than other people. They see patterns, they're quick, they make decisions, and we cheat. Like if the board's not there, we start again. So that's what makes this game so interesting, is like people are figuring out the games. But to be a good trend spotter, and all of us have it in us, it's the ability to connect the dots. And the reason this game is so popular is people love doing this stuff, right? We like solving puzzles. And these puzzles of the markets and how things are connected have never been more solvable, okay? And have never really stood out better than they have today. Let's look at Bitcoin. Who's heard of Bitcoin? Okay, this is a phenomenal thing that's happening right now, at least in the United States and a few other countries. But if you look at Bitcoin, the currency, back in 2007, I was being told about Bitcoin by some guys in Israel that I invested in. They were like, Howard, Forget about this company. You should buy Bitcoins. You should, whatever you don't invest in us, you should buy in Bitcoins. And Bitcoin was like $1. And I was like, are you crazy? Like a currency? This is before the crash. And I was like, leave me alone. It went from 1 to 11 back in 2006, 2007, then crashed. So never to be heard from again, so I thought, until this year, and went from, I don't know, a couple bucks to $240. That is an incredible phenomenon. Call it tulips, call it whatever you want. And of course, we've seen this before. You know, we've seen that pattern before if we're in the financial business. There's only going to be a crash after that. But something interesting has happened. While the Bitcoin itself may be done, while the Bitcoin itself, we can't be for sure if it makes sense. JP and I can argue about this all the time. Is the government going to step in? It's not an investment for your clients. It's not really an investment for me, but I'm fascinated by it because what does it mean? How did that happen? And is it a one-time event? What kind of trends does that set in motion? So I may not want to buy Bitcoins, but because of the web and who I read, I'm reading, and I wrote this post, I go, Fred Wilson, who is a very early stage media investor and invested in Twitter and Foursquare and Etsy and all these companies, made an investment after Bitcoin had already crashed into a company called Coinbase. So now I'm putting the dots together and going, okay, so I missed Bitcoin, I thought it was all over, but then the smartest guy that I know put $5 million into a Bitcoin kind of operator, market maker. So I know that there is some signal there. I know that if the guy that's smart just put $5 million to work, and I know on the other end, Warren Buffett goes, I've never heard of Bitcoin. So I like that. I like, as a small investor, that it's jumped the shark. It's not going away. You know, we could argue why it's not going away. My argument would be trust. There's this counterculture now around the trust. We pissed away the trust, and Bitcoin jumped the shark or something like it. So you may not want to put 1% of your customers' money in Bitcoin. I know I don't want to. I never got into the gold craze myself either. But you got Fred Wilson investing. You now have Warren Buffett who says I don't know what it is, but Warren's not always right. Warren just signed up for Twitter a month ago. 5 years ago, he would have laughed. He goes, what's Twitter? Twitter's not important. So, I know there's a trend in here somewhere. And this is where now it's not so early where Fred Wilson hasn't invested, and it's not so late that Warren Buffett acknowledges that it exists. That's how we spot things. And that's the beauty. It took me a while to get you guys to really turn it, because I'm not a professional speaker, but that's the beauty of trends. You have to find ranges of experts out there who are all publishing stuff who give you signal. Next is Tesla Motors. And Tesla, I don't know, who's heard of Tesla here? The rage all of a sudden. Bailed out by the government. He's a crazy smart man, as we all know, PayPal. And so I am a stock investor. And I love, as much as I love early stage investing, I love momentum at all parallels of the market. And so to me, Tesla got interesting, near all-time highs at the beginning of the year. I was tweeting about it on StockTwits. I was buying some stock in the high 30s. And, here's my FUCK. I sold in the low 60s. And we see what happened there. What's so interesting about the markets, and this does this all the time, and it's going to do it more and more, and I'll explain why, is that there is only one way for people to own Tesla right now. And they're all humongous funds. And they're all scrambling to get this on their books because there is only one Tesla. And so it plays itself out. This momentum and these trends plays itself out in the public markets all the time. And people overthink it and they go, what's Tesla not worth $30 billion? But in the world that we live in today, it's very much supply-demand. And as a trend follower that works on both sides of this, the signals have never been connected more and more. Bitcoin. So where Tesla may not be able to hold $100, it may drop back to $50, it's now set in motion an ecosystem that's not going to come back. That's not going to be able to be shut down. Elon and company, there's going to be businesses built around this. There's so much capital flowing into this industry now that whether you like Tesla or not, it's time to look for derivatives in this industry. It finally got outside the box. And while Tesla may not be the play, just like Bitcoin may not be the play, there's thousands of other opportunities for angel investors like me. Now that I have signal that basically there's still risk, but it's worth looking at, and it's not too late. I live in San Diego. I don't know if anybody's ever been there. It's full, so there is no room. But I think you can do what I do from anywhere. And I'm living proof of that. We're a one-car family in California, which is almost, I think it's against the law in California. And that's my jog that my wife and I do every day on the beach while I do this stuff. So I think it's important to understand that in this new era of the phone, the iPad, that this stuff can be done everywhere. Something else about trend spotting, that's my son Max, is the faster you build domain experience, the better in this world that we live in now. It's a great time to be passionate. If you love finance, and I love markets and finance, it's a great time for me because I have 10 years of domain experience. I didn't know why I wanted. Now all of a sudden, all this experience means something. And so with all this global leverage of people where you can show up and kind of be known as an expert in a field, domain experience matters. If you're not passionate about what you're doing, really at a young age, the earlier you go into a business that you want to be involved in the rest of your life, the better. Next is, do I have a few minutes still? No. Oh, we're done? Shit. We can wrap it up as quickly as you can, please. The other thing about trend spotting, I'll wrap it up, is, again, when I'm teaching my son Max about golf, is you pick your target. For me, it's this social web. I've picked this target. I know it's a trend. I know it's in motion. And I attack it. I'm investing in clusters around this area. Smart people attacking the same problem in a big trend, right? It's risky, obviously, just like swinging hard is risky. The ball could go in a lot of places. But when you've picked a trend and you feel the energy around these things, you have to attack. Trends are all around. This is my son who's sleeping. 1/3 of the time, before I started angel investing, sleep was a big industry for me. Sleep is one of those industries that nobody really talks about, but every public company has been acquired in the history of sleep by other companies because it's a phenomenal industry. We spend half of our life sleeping. So this sleep trend is an incredible trend, just simple trends that we're involved in. Obviously, watching my kids, I pick up a lot about trends too. What's that? Oh, they want me to finish. So anyways, I'm going to be around the whole week. I really wanted to talk, just quickly to end with, there's a big difference between early stage investing and late stage investing. I do both. I love momentum on both ends of the spectrum. Meaning at the early stage, it's really about the people. You talk about price, you talk about all these things. The Twitter mistake that I made was that the only reason I didn't want to invest in Twitter because it was a high valuation. I love the product, I love the people, I love the idea of it. It had momentum, it had great investors. The lesson is, if price is your only reason in an early stage thing not to invest, then you better gut up and just write a check. You don't have to write your full check. But I made that mistake with Twitter. I made it again a couple months later with Zynga. Same problem. I just loved everything about it. The price was too high. So people matter the most at the early stage. When I meet a person, I can tell if the trend's right and the person's right, you're betting on the person. At the very public end, the Tesla side of it, I don't care about the financials. I don't care about who's running the company or what this quarter's sales are. The price and volume tell me more than I need, and liquidity. So liquidity matters the most on the other end of the spectrum. So you got people on one side, and then you have liquidity on the high end. And that's how I like to look at momentum. And I'll end it there, and you guys can ask questions. Sorry I ran late. That's all right.